In a modern society, economic calculation is performed in companies and also by individuals using accounting. Goethe wrote that double-entry bookkeeping was one of the finest inventions of the human mind. And he was right. However, accounting was not invented nor discovered. Accounting is the result of an evolutionary process. Accounting is the language of business, and like any language, it was not discovered by anyone. Instead, generations and generations of thousands of traders and entrepreneurs who needed to determine whether they were making profits or losses on their business, industrial and craft projects, gradually developed the wonder that is double-entry accounting. The first records of double-entry accounting have been found in different archaeological excavations in Egypt, and they date back to the Ptolemaic period. And certainly in the commercial and trading cities of the Middle Ages, in medieval Italy, in Venice, Florence, Pisa, and also in Spain, in Barcelona, in the 13th and 14th centuries, double-entry accounting was already highly developed. The first book about accounting was written by a Franciscan monk named Luca Pacioli, who taught mathematics to Leonardo da Vinci. Some ignorant people conclude that Pacioli invented accounting. Nothing could be further from the truth. What he did was to systematically formulate knowledge that had already slowly evolved over a very lengthy period of time, like languages evolve. Spanish and English, for instance. Accounting ultimately takes the form of two statements. One statement is a kind of, we could call it a photograph of the wealth of a company or an individual. This sort of photograph of a given instant is called a balance sheet. A balance sheet is a photo of the goods, rights and obligations which a person or company has at a given instant. For example, let's write December the 31st, 2009. In accordance with tradition and custom, the left side is labelled assets, and the right side, liabilities. On the asset side, you record the value at market prices. We won't go into the debate about whether using historical costs is better. You record the estimated value at market prices of the goods and rights you own, or the company owns. In other words, what you have, goods and rights. And on the right side, the liabilities side, you record the value of the obligations you have to third parties, what you owe, obligations and debts. Okay, well, double-entry accounting is based on the principle that both sides of the equation, thus we call it double entry, always add up to the same amount. The difference between the two, the amount necessary to make liabilities equal assets, is called owner's equity, or equity capital. It consists of capital and reserves, the owner's equity of the company. Obligations and owner's equity comprise the liabilities, which always add up to the same amount as the assets. Well, another, more important statement exists, and it is a movie. We're not talking about still images anymore, but a movie. This statement is called a profit and loss account. A profit and loss account does not capture a given instant. It is not a photograph, but a movie of events throughout the year, from January the 1st to December the 31st, throughout the financial year. The movie reflects daily income and expenses. By long-established tradition, the left side of this statement is labelled debit. Don't ask me why, that's just the way it is. The right side is labelled credit. Please take note. On the debit side, we record expenses, and on the credit side, we record income. And in the end, both sides must balance. They must always add up to the same final result. How can that be possible? Well, it's very simple. If income exceeds expenses, and that is what I wish for all of you, you will have to add something here to make both sides balance. and that something consists of the profits of the financial year, or if you prefer, it is the credit balance of the profit and loss account. It is the profit, and if you add in that amount, both sides will balance. If the opposite is true, and expenses exceed income, then you will have to add something to income, and that something will be the losses of the financial year, or the debit balance of the profit and loss account. All of this is possible thanks to the existence of market prices, which enable us to estimate the value of the goods and services available to us, and to calculate income and expenses. Economic calculation is an essential guide to action. It offers us the support we need to be able to cope with obstacles in an environment of uncertainty. Economic calculation is not perfect. It rests on monetary prices, which, as we will see, are expressed in a monetary unit. The euro, for example, with a purchasing power that is constantly changing. Moreover, a series of goods and services fall outside the sphere of trade. They are called res extra commercium. They are not bought nor sold, and therefore they have no market prices and cannot be the object of economic calculation. For example, honor, heroism, honesty. When I was a schoolboy, I remember listening to a song that went, "True love can't be bought nor sold. El cariño verdadero ni se compra ni se vende. There is no price for a kilo of love." We cannot make numerical calculations based on it, nor include it in our accounting. Love may influence our actions and decisions, however, but these must be the result of direct comparisons. Economic calculation is of no assistance there. Nevertheless, thank God, the vast majority of the actions in which we are involved are made much easier by the existence of market prices and the possibility of using accounting to determine whether we are making a profit or a loss in what we are doing. Honor, virtue, glory, health and life are not usually bought and sold. Slavery does not exist. It did exist in Rome, and there was a market price for buying a slave. There are market prices for an hour of different types of work, etc., and that enables us to make calculations and determine personnel costs, etc.